Good afternoon, everybody. Happy September. I hope everybody is getting back to their September routines and enjoying a little bit of this wonderful late summer weather we've been getting in the lower mainland. The markets continue to be volatile, and we've certainly seen a tumultuous year in 2021. So to provide a little bit of context on things, we thought we'd invite back Greg Valliere, who some of us have seen in the past, who is the Chief U.S. Policy Strategist for AGF Investments. Greg has been in the business for 40 years, advising institutions and investment companies. He is also a frequent contributor to CNN and Bloomberg. We're thrilled to have him here today. Greg, thank you for joining us.
Great to be back with you.
So I have 3 questions that I wanted to ask you today to provide a little bit of context to our clients on what's going on in the markets and where things are at. So perhaps we could start by giving us a quick high-level view on where things are at in the economy regarding inflation, jobs, and whatnot.
Well, you used the correct word a minute or two ago, volatility. I think the volatility will persist. The Federal Reserve got caught off guard when it came to inflation. They used a word that has now been banned called transitory. They don't want to say anymore that inflation is transitory. Yeah. So you've got a chairman, Jerome Powell, who's going to continue raising interest rates. We'll see another 2 or 3 moves between now and early 2023. Maybe not 75 basis points every time. Maybe it goes to 50, goes down to 25. But unfortunately, we have more interest rate increases to come.
People are talking about inflation a lot. Obviously, that's the headline news in the markets. How does that compare to what you're seeing in terms of corporate profits and in terms of GDP growth?
Well, there are a lot of ironies right now, Lorenzo. You've got the labor market is red hot. I mean, there's a job for anybody who wants a job. The GDP is okay. I don't think we're in a recession yet. We may not be in a recession for this cycle. And corporate earnings are okay as well. The problem is almost exclusively inflation that's gotten out of control. And we're now getting into the 8% neighborhood. That's not sustainable. And Jerome Powell knows it's bitter medicine. He knows he's not going to be a popular guy, but he has to do it.
Let's talk a little bit about the geopolitics now of things. Obviously, we've seen a prolonged conflict in the Ukraine, now entering, I believe, its 7th month. Yep. Certainly lasting a lot longer than people anticipated. The outcome at this point seems rather uncertain still. How do you feel that's impacting North American markets?
Well, it has affected inflation, no question about it, on not just energy, but food and raw materials, and that inflation may stay elevated until the war ends. As far as the war itself, I am an unabashed optimist. I think that the Russians have done a terrible job. The Ukrainian military has exceeded all expectations. They've driven the Russian troops back to near the border in many parts of Ukraine. Ukrainian soldiers have been dominant. Russian soldiers do not want to die for Vladimir Putin. And they're leaving the front lines. They're leaving their weapons behind. And I think that this will probably persist. The next big story, in my opinion, is going to be unrest in Russia. With the average Russian feeling that this war is not justified, with increasing dissent from generals who have lost about a dozen of their colleagues. A lot of the Russian generals, I think, feel the war is futile. So there's going to be a lot of new stories. Unfortunately, final point, I think we probably have to go through this upcoming winter before the war is resolved with a pretty favorable truce, but this winter could be a tough one in Western Europe.
How does China play into this? Certainly, it seemed that at the beginning, China was probably one of the main benefactors of this conflict, with payment systems redirecting from the West to Chinese systems and whatnot. And China, I guess, tacitly being happy that Russia was moving more eastwards in its geopolitical alignment, although that's been happening for a while now with joint military exercises and whatnot. Where do you think things stand now in terms of China's positioning in this?
I'd say there have been 2 remarkable developments in the last few weeks. The first is public criticism from President Xi of China that Russia has to cool it, has to bring this to a close. He did not exactly have a warm and cuddly meeting with Putin a couple of weeks ago. Beyond that, still another big surprise, and that was Prime Minister Modi of India, who said just recently that Putin has to bring this to an end, prompting Putin to say he's going to try to do that. I'm not sure I believe that. But What this shows to me is that Russia increasingly is being isolated in the entire world.
How does that play out from a European perspective then?
Well, I think European leaders have one big issue to deal with, and that is, could their constituents start to grumble by the end of the winter that it's been a cold winter, they don't have enough supplies? At some point, could Western Europeans say, let's get a deal here? And could they pressure Zelensky to cut a deal when perhaps he doesn't want to? That's a big wild card.
But long term, you think that Russia's been weakened in this process, regardless of the outcome?
Absolutely. And frankly, I think there's at least a 1 in 3 chance that Putin is forced out, either by generals or by general dissent in Moscow and St. Petersburg. I think Putin has lost a lot of credibility.
Now, the third thing we wanted to ask you about today was obviously the upcoming midterms in the U.S. How do you feel that's playing out from a stock market perspective?
Well, I think there's a big market story here, Lorenzo, and that is, it looks to me as if the House of Representatives, controlled by Nancy Pelosi and the liberals, will flip to the Republicans in the November election, to Kevin McCarthy and the conservatives. So why is that a good story for investors? I think it means any new taxes, whether it's capital gains, the estate tax, tax rates, would die in the House. The conservatives absolutely would refuse to raise taxes if Biden, in his second 2 years, tries to impose tax hikes. Now, I'm not certain the House is going to flip, but I think it's likely. The more interesting story in recent weeks has been in the Senate, where all of a sudden the Democrats are looking stronger. I think abortion has had a big issue for a lot of Democrats. So you could see the Senate stay Democratic by a seat or two, but if the House flips, that means A, Biden's agenda is finished. B, there will be a hearing every week on Hunter Biden and Biden scandals. The Republicans will want to make this about scandals. And because of that, if it becomes a very unenjoyable process for Joe Biden, I don't rule out him announcing right after Christmas that he's not seeking re-election.
So we've got 3 big forces here that we've talked about. We've got the U.S. election, the U.S. midterms coming up. We've got the ongoing conflict in the Ukraine, and we've got obviously this inflation. The challenge of Western democracies, or really the world, taming, inflation that's resulted from COVID and the stimulus that's happened. You've got a crystal ball right now. I'm giving you a crystal ball. How is the rest of this year playing out in North American equity markets, in your opinion?
Well, again, I return to the word we've both used, and that's volatility. I think that it's not going to be a smooth next few months. There'll be ups and downs that could be kind of rocky. I do worry that the U.S. political environment is so bitterly partisan right now that there could be more charges of election irregularities, things like that could crop up. I do worry that Donald Trump, in his very divisive rhetoric, will be back on the scene. If he's not, there'll be the governor of Florida, Ron DeSantis, who's also very conservative. So it will be kind of an awkward phase. One other point I would make quickly. If we see continued unrest with Russia, if we see China saying things about Taiwan, if we see the Iranians not getting a nuclear deal, which I don't think they'll do, I think that one of the big implications in Washington is spending more on defense. I've said for a while, and I'll still say, that one of the pure investment plays in Washington is the defense stocks, and I think that will continue.
You've shared some perspectives on the Ukrainian conflict. You've shared some perspectives on the upcoming midterms, as well as the inflation challenges that we're dealing with. Can you tell me, do you think right now in North America we've hit the bottom?
I think we may be getting closer to the bottom, Lorenzo. You've got a labor market that's red hot, and I think that will persist. You do have some problems with inflation, but give Jerome Powell, the Fed chairman, his due. He is determined to squash inflation, and he will, just as Paul Volcker did. And I think a year from now, or maybe even 8 months from now, it'll be clear that inflation is declining. And by that point, interest rates, I think, will have clearly peaked.
So looking probably at some volatility for the next 6 to 12 months going forward, but we've probably, in your opinion, perhaps near the bottom of, we've certainly priced in a recession, it seems at this point, in many Western markets.
And if there's a pleasant surprise lurking, it would be a truce between Russia and Ukraine. This war will not last forever. At some point, there'll be a truce. I think Zelensky wants one. I think Putin will have to accept one. Once we get to that point, I think it'll be a very bullish story for the markets.
Greg, thank you so much for stopping by today and sharing your opinions. I really appreciate it. As always, if you have any questions, please give Matt, Joe, or I a call. We're always happy to discuss this with you. Hope you have a great September.